All right, what's up, guys? I hope you're doing well. James here from jamesdforsythe.com. So I wanted to come on here and talk a bit about a recent speech that Fed Governor Michelle Bowman gave, mostly about financial education and how the Federal Reserve kind of partakes in that. But also, she gives three things that the Fed basically does to try to improve financial inclusion, right? And when it comes to this topic specifically, I just kind of, because I know it can be kind of, I guess, controversial in a way. Um, I'd basically just face value of what they say, kind of initially, what are some implications of this, so on. Like, I don't get too in depth or opinionated in it whatsoever. I love the fact that she uses a lot of actual stats, which is helpful. But it's also like you have to think about the whole picture as well. But with that being said, we'll get into her three aspects of what the Fed does to basically remedy this, but also, some of the other kind of programs that they have and what they do, right? And so she actually gave this speech for an intergovernmental body called FLEC, right, which is the Financial Literacy and Education Commission, right? And this is basically what they do, right? So that being said, they basically provide consumers with the necessary tools and information to help them make sound financial decisions and enhance economic well-being for everyone is kind of their goal, right? So with that being said, to get this part kind of out of the way, the speech and everything and all relevant links, whatever, specifically the speech, will be in the description as always. The sources are always there. So just to keep that in mind, because I'm not going to just read it to you. So if you want to get the actual, like, all of the information, it's there for yourself. And I don't think this one does have a watch live link. So I'm assuming maybe they'll do a replay as well, where if you go through that watch live link, you can actually, watch the speech instead of read it. I just prefer to read them. So to continue on, right, so they undertake a variety of efforts to strengthen resources for teachers and communities, including something called the Federal Reserve Education.org website, kind of a website they use to do this stuff, which basically provides teachers with online resources about personal finance and economics for all students from kindergarten through college, right? So K through 12, and then also college. I'm kind of curious of what exactly they do for the college aspect, because I'd assume you can just, like, if you go into finance, you get it anyway. But anyways, so other programs like the Philadelphia Fed's Keys to Financial Success curriculum and the St. Louis Fed's Economic Education Guides and videos support students through knowledge and skills development to understand how economics impacts their day-to-day lives. Right, it's basically also some of the actual regional Fed banks do something similar as well. This isn't just a over-encompassing, like, board of governors thing, right? And not just like specific committees in them as well. So to get into her three kind of aspects of what they do to remedy financial inclusion, or as they say, right, is basically increasing access to banking accounts. Specifically, what she means is transaction accounts, like checking accounts, that sort of thing. Also, the availability of responsible small dollar lending products for short-term financial needs. I'm assuming this is kind of going towards credit cards and so on, that sort of stuff. And then also expanded reach of financial initiatives to Indigenous and Native communities to more effectively assist in providing access to the broader financial economy. And I did a video, I believe it was also from a speech from Michelle Bowman, going over specifically how that applies to Indigenous people and that sort of thing. Because she did something with the legislation and research revolving around that. I'm assuming that's something that's her kind of niche in that respect, because I've basically everything I've seen about that sort of stuff has, like, Native Americans and all that with respect to financial inclusion. It's always had her name on it somewhere. So there's that. But to continue on with some actual, like, stats and such. So the Federal Reserve's Survey of Household Economics and Decision Making, SHED, showed in 2021 that 94% of adults have a bank or credit union account, and the FDIC's 2021 National Survey of Unbanked and Underbanked Households found that 95.5% of all U.S. households were banked, which is the highest level since the survey began in 2009. So you got an increase in the amount of banked population, right, to the tune of 95.5%. So that's something to keep in mind. But they also break it down into into different ethnic groups, right? So the Fed's survey of consumer finances shows similar results because there's multiple different types of surveys that they do, all measuring it somewhat differently. So from 1989 to 2019, the percentage of U.S. adults with bank accounts rose from 85.6 to 94.5%, right? And so a 10% total increase, right? And then they also have some stats about bank account ownership. So from African American adults, it went from, during the same time period, 56.7% to 86.8%. And then for Hispanics, it was 63.5 to 89.5. So all of them kind of approaching at least 90%, right? So the vast majority of them, right? So in fact, the SHED survey data helps to identify characteristics of those who may not choose to use a deposit account or do not have access to one, right? To kind of differentiate between the surveys as well. And this is one thing, especially with respect to the topic of financial inclusion, I like to bring up is some of the reasons that they give basically don't really match up with them trying to how to articulate this the best way. Basically, with what they try to do to incentivize people to become banked or to get bank accounts isn't going to help for some of the reasons that they give, but they never give data on like how big of a difference that makes. The only other one that I've seen that's given any form of information in that respect of like how exactly this would help or to what degree what they're trying to do would actually improve whatever marginal amount was, I believe it was Fed Governor Christopher Waller in something related to, I think it was stablecoins, right? To where he was basically talking about, like, because the whole point of the stablecoins and the CBDC argument is basically to have, increased financial inclusion to where people will have these bank accounts, right? Make them not as expensive to kind of incentivize them to get into it more. And with that being said, he went through some data and said basically like not even 1% of basically this population, right, that's unbanked, would be open to doing more, right, to actually having a bank account for whatever reasons they have. And one of the things too is, and I'll touch on this, we'll save it for in a minute whenever it's more applicable, I guess. So basically, there's multiple programs that the Fed has, right? And so the Fed continues to support expanding access to bank accounts through the Bank On program, right? Is one of the programs that they have, and it actually took some digging to get to it. So basically, it provides those without a banking relationship to access low or no cost deposit accounts. And in 2022, more than 200 banks offered certified Bank On accounts. These accounts are now available at more than 46,000 U.S. bank and credit union branches. So, I went into this a little bit more for the Bank On thing, or for the Bank On program. And one thing to note is they never really, they always bring up the fact that, some of the reasons that they give it, basically, specifically for Bank On, he says many Americans are driven to use expensive alternative financial services, including check cashers, payday lenders, and pawn shops that charge high fees for financial services that fail to help people get ahead, right? But it doesn't really go into all the reasons why they do it. I guess the best way to say what I'm trying to say is they never give a complete explanation. It seems always kind of half-hearted in a way. They don't go into full reasons, and it's just, Yeah, this is part of the reason why I have a hard problem with it. So basically, specifically what the Bank On program says on their website, and I'll link that one as well, is so basically one of the reasons why these people don't have bank accounts is because of, they say, high or unpredictable fees, right? That's one of the reasons. So there's other ones too, right? But then they're talking about what they're using instead has high and unpredictable fees. So it's like logically there's no, okay, I can understand if one is higher, then why don't they just get bank accounts? Or maybe they're using those other, I guess, alternative financial products. I don't know if that's the best way to describe it, but different than a bank account. They're using that instead. So if those are actually higher in fees, why would they not just use the regular bank account, right? And that gives other reasons too, like a distrust in financial institutions. And again, like that one specifically, like there's not much you can do to force them to get a bank account, right? Unless you kind of go the whole full-blown CBDC route to where everyone that's the only option you have, which again, from the stuff that they've been saying, I guess a huge disclaimer if you believe them, they're not going to basically make that exclusive. It's supposed to be more of a kind of auxiliary thing, right? Parallel system that goes along with what we have traditionally, at least to some degree, for some arguments. But to continue on from a slightly, I don't know if I wouldn't say off-topic rant, but regardless. Anyways, to touch more on the small dollar loans part. So as loan markets continue to evolve, well-designed small dollar loan products remain an important resource for consumers, helping to encourage positive credit practices and transition into additional financial products, right? And so, again, not much data on this one specifically, but basically just restating what they're trying to do, right? And I think I accidentally skipped over this stat on accident. So, yeah, I did. So to kind of backtrack a little bit, so for the SHED survey, again, on how they're kind of identifying different things or different kind of groups, so to speak, he says the most recent survey results show that income and education may also play a factor among the respondents. So 24% of adults who have not earned a high school diploma and 17% making less than 25 grand a year do not own a deposit account, right? So kind of targeting more the lower income part of the spectrum. Again, just the respondents, right? At least who responded to this survey. But it's also like, okay, that's 17% of adults. And it's not a negligible portion, but it's still like keeping things in mind, because with only one statistic or like one point, at this point you don't know really, you can't understand the trend and that sort of thing, right? Besides just kind of anecdotal, like what she's saying, right? Okay, yes, it's improving, but still. You need to look at historical data, which I'll look into trying to find. But again, it's just a speech. You can't expect the whole world view to be given, right? So yeah, I guess to close with, recent research shows promising trends in access to bank accounts for Native American, Alaskan, and Indian communities, with over 93% of these households now holding a bank account, which is nearly a 10 percentage point increase from 2019, right? And so I guess that's kind of the main point, and what I gather from a lot of this financial inclusion talk is specifically for banked and unbanked people, right? So basically, or I guess households would be a better way to say it, but most of these percentages on aggregate total, looking at the entire population as a whole, or at least what they're measuring, are close to 90%, right? And so it's one of those, the law of diminishing returns, but it's also like, would doing this really help incentivize those people to go get bank accounts, especially if they don't want to, right? And there's other reasons as well. It's one of those things, I'm not saying it's like, they're lazy and don't do it. It's just there's other reasons, and probably very logical reasons, why they don't do it. Everyone has their own situation. But it's also like, what can you do beyond just provide basic incentives and basically have some bank account, or at least having more competition in these banking markets wherever they happen to be, and basically drive down the fees and stuff that will make them, that if the high fees and kind of the high cost of having a bank account, apparently high cost, then is there any further incentive that would actually be helpful to them just driving down those costs, right? Maybe by having more banks or more different banks be in each banking market, or just kind of the whole, I guess, free market capitalism approach to where there's competition and they can actually, like, compete and hopefully help the consumer out. But with that being said, I'm going to leave this one here. Again, the link to the speech, and I'll put the bank on information that I found, because they have other statistics in there as well that you might find interesting. So I'll put all of those in the description so you guys can find them. But I'm going to leave this one here. So I hope you guys have a good night, and I'll see you on the next one.